Sam, my guy, how's it going?
Yeah, very well. Thanks for having me on today.
Oh, it's an absolute pleasure, man. With a jawline like that, you should be on here every week. Let's just be honest. What are you thinking as we head into May right now? And what is this right here?
We have a very mixed macro backdrop at the moment. The Fed funds rate is around 3.6% at the moment within its target range. However, if we look overseas, we're seeing quite the opposite, as central banks are expecting rising inflation, which is different to the US setup. So essentially the US can stay accommodative here, but most other central banks can't. And also the Iran war isn't doing any favors on the inflation point of view, with oil staying around $90 to $100. And historically, this has been a couple quarters of a lag until we see higher inflation prints, which makes it hard for the easing cycle to keep going.
Just for people who might not know, when you say the easing cycle, or when you say there's an easing bias, what do you mean by that?
Most simply just rate cuts, per se.
It's interesting to see the kind of disparity between the US and the rest of the world here. When there is such a great disparity, like, do you think the US's overwhelming weight in financial markets ends up kind of setting the pace, or do you think we might see some more of a divergence between US markets and international markets?
It's a good question. I mean, every cycle is different, because I know in like 2016, 2017 cycle, the US had a negative, was raising rates, M2 was decreasing, whereas the rest of the world, like China, was cutting a lot. But the US is the dominant player still in financial markets. So I would see the fact they're cutting as still a positive sign.
Okay, so obviously all of these kind of like global view is very helpful to have a general kind of foundation of where things might go. It's looking a little bit mixed, of course, on the macro side. What are some of the indicators that you're looking at from a cycle to cycle basis?
We haven't seen consistent expansion since 2021. So if you are a believer in like the bull case for the next year, you could argue that most of the price action we've seen, and we've never had a real big altcoin season, we've never actually seen the underlying economy actually expand properly in order to get that risk-on environment. When the underlying economy is doing well, everyone's making more money, there's rate rises, manufacturing expanding, and that's when people typically speculate on tech stocks, on crypto, and that's when we might see Bitcoin continue to rise, but Bitcoin dominance actually start to decrease. And that's when Solana, your project tokens, start to do very well. So this is trying to just to contextualize. Perhaps the price action we've seen over the last 4 or 5 years hasn't been that favorable, but it can largely be explained by a lot of underlying factors. Another one's the copper to gold ratio, which I can go into as well.
Please, yeah.
So the copper to gold ratio tells a very similar story, as both metals are essentially mined and produced at comparable scale and costs, but they signal very different things. So gold is essentially the monetary hedge, where central banks like to accumulate gold before they do big easing cycles, whereas copper, on the other hand, is industrial and it tracks construction and manufacturing demand. So the ratio is essentially a very clean read on where we are in a certain business cycle phase, as you have easing come first, where gold leads, and then you have the real economy responds, and that's when copper outperforms. I like the ISM. Typically, you can see in the graph there that when you have that ratio of copper over gold, that's typically when you see Bitcoin and crypto market caps peak for that 4 to 6 year cycle. As you can see here, it's still very depressed. We haven't had that up leg that represents the underlying economy doing well. And this is very correlated to crypto market cap, Bitcoin, and other altcoins.
That's a great indicator. I don't know if I'm showing my own ignorance, but I have not actually seen the kind of copper gold indicator. Keep going though. Let's talk about tell us about the M2 money supply and what that's been looking like from the growth perspective.
Yeah, and M2 as well. So that's another good indicator, particularly the rate on rate change of growth is something that I like to look at. And so usually we have like gold increasing and then you have M2 increasing. But as you can see here, roughly like when the rate of change, so the year on year or the 6 month on 6 months looks to be peaking, that's also a pretty clear indicator of market cycle tops as well. And we have been getting some momentum here. But typically we get M2 momentum and then we see the copper to gold ratio to start to peak, and then we see manufacturing ISM start to peak. So this is something we can see a bit of momentum at the moment. So if M2 continues to rise, I see that as a very positive catalyst for the year ahead.
So across these kind of 3 key indicators, we're starting, it seems like, to see some bullish kind of actions. Now, could be a fake out. It's a little bit too early to tell, but certainly all 3 of these seem to be kind of poised to move in the right direction right now. Am I reading these correctly?
Yeah, exactly. Like you said, it is a momentum game, but the fact we've had 4 manufacturing prints being positive in a row, as long as in my opinion, if we don't see another, I guess, wall pop out or something like that could hold an expansion. If we see that ISM go all the way up to 60, usually that's when everyone's making more money, more people are speculating, and crypto does the best.
You want to talk about the Bitcoin price, or should we go on to the next slide here?
Bitcoin price is also, yeah, you can see that with the three lines, they're closely related, although it's not perfect. And it's just like, obviously we saw a double top in 21, which makes it a bit difficult. But you can see the first top, which was pretty much the same as the second top. You can see that they're very in line with the manufacturing, copper to gold ratio, and M2 movement.
All right. This is, I think, like a really useful kind of mental model for where things are going, where we are in the cycle and where things might go, and the kind of key things to look out for. What I really appreciate about this, Sam, is that so often when I'm talking about macro or thinking about macro, there's 1,000 different indicators that people are looking at. And I think distilling it down to here of like, where is the activity in the real economy? How do you see that expressed through these kind of metals that obviously have very deep and liquid markets? And then how do you think about, of course, the M2 money supply is clarifying to just have a kind of a key focus over here. All right, so that's on the macro side. Let's talk about the micro side, on the Jupiter side. How do you think about Jupiter and the Jupiter story?
It is very compelling at the moment. I'd say particularly what we're seeing, which we go into on the first slide, around like spot spreads at the moment. So Jupiter's position as an aggregator within Solana really highlights, I guess, the value prop of Solana and crypto more generally. So over the last 2 years on Solana, we've seen a new innovation of proprietary AMMs, and they're essentially a market maker, the same one that would be quoting on Binance or another exchange, except they put their pricing and risk engine inside Onchain, inside the contract. And what they do is they reference external SEX prices, they run their own simulations of where the price could be, and they continuously update their quote on Solana. So that's one piece of the puzzle. The second piece of the puzzle is where aggregators like Jupiter come along, as Jupiter routes more than 90% of spot volume on Solana. But essentially, the aggregator like Jupiter forces all these prop AMMs to compete on every single trade. And roughly 10 makers each second are submitting their just-in-time quotes. And then the aggregator like Jupiter can essentially pick the best ones, or even portions of each prop AMM to have just the top of book quotes across multiple market makers. And this is essentially what this chart is showing, that now for both buyers and sellers, you're consistently seeing a much cheaper execution price. So buyers are receiving more and sellers are getting more, especially when you're including SEX fees. So the chart here kind of highlights that. As you can see, over the last year, the trend is now materially lower than Binance. And even when you do a dot plot of like 25 to 75% standard deviation, it's all consistently lower.
Which is amazing. I mean, I've been in crypto long enough to remember the days when it seemed like this would be literally impossible. And the only reason you would ever trade on chain is because you get these long tail assets that you can't get anywhere else. The idea that you might actually be able to get better price execution by actually coming directly on chain, and that would be a reason to move liquidity on chain, I think is quite novel. And indeed, if you are bullish on creating real value for real people, this is a very real kind of value that's being created for the market as a whole. And a big shout out to Humidify and Bisonify and all the rest of the prop AMMs who are helping drive this. Very cool. When you look at the DEX aggregator landscape, what do you see?
Yes, I'm so obviously seeing Jupiter's market share remain very strong over the years, even though with DFlow, OKX and Titan becoming visible with small slices since 2025, Jupiter has consistently sat above 90%. And this is really highlighting the market share dynamics at the moment. My point to why it would be sticky is because aggregator quality compounds here. More flow gives you better routing data, better data builds tighter quotes, tighter routes pull in more app integrations, and more app integrations pull in more flow. So obviously this chart just highlighting Jupiter's market share and how positive it is.
Yeah, I think you did hit the nail on the head. Indeed, is that we just have more data that we're able to kind of optimize for. We're able to simulate better. We're able to track across all the other trades that are happening across on-chain, and then use that to kind of influence kind of quotes and what we think is realistic and what the right slippage will be, automatic slippage detection, et cetera. It's always great to see this kind of put out because obviously on the timeline, sometimes things are not as dominant or not. But then we get into perps. Now, this is an area where the story is a little bit different, I might argue. What are you thinking in terms of perps here?
Yeah, I mean, it's obviously perps is a massive story in crypto at the moment. We've seen Hyperliquid success over the last couple of years. And a lot of questions have kind of arisen from like, why haven't we seen the same amount of volume of perps on Solana or like Solana applications? So a recent report I did was just looking at Drift, because it essentially has an on-chain, it had an on-chain central limit order book for perp performance. And you can see here that it was a large tracking error. It was never able to successfully essentially give users the correct price. So for any big sophisticated trader or active trader, this large tracking error would cause a lot of problems and can essentially explain why we haven't have much volume compared to Hyperliquid per se. But that being said, there are a lot of developments that Solana is progressing to improve its microstructure. For example, Judo BAM is already live, which is a block builder for an encrypted mempool and plugin framework that one day should let perp venues control their own sequencing with things like cancel before take plugins. There's also Alpenglow and ANS's Constellation MCP proposal on the horizon, which should decrease block times and also eliminate some of the problems that Solana has because of its leader-based system. But at the moment, you could argue it hasn't really been the application's fault for not achieving as much volume. It's largely been these architectural constraints on Solana. But the positive sign here is that they are actively aware of this and actively improving infrastructure upgrades. So one day, hopefully we see a world where individual applications on top of Solana can compete with big players like Hyperliquid. And then onto the next one is where another part of the report we did was highlighting Jupiter's success. So Jupiter uses a pool Oracle-based perp where JLP essentially takes the other side. In our report, we highlighted how this is the most composable design across Solana DeFi and built on a distribution moat that compounds with the rest of the ecosystem. And a key point of our note was that we believe Jupiter's success highlights how strong distribution and a go-to-market can also lever success in the perps domain, which perhaps other perps protocols have struggled to do. As you can see in the chart here, the only other player with notable volumes is Pacifica. However, it's important to note that Pacifica is largely off Solana compared to Jupiter being a fully composable within Solana.
Yeah, I think it's definitely interesting. You know, we're all at Jupiter, I can say this, and I think it goes to the entire Solana ecosystem. Like, we want to do better on perps. Certainly, like, we can improve. I think JLP as a model is really effective, and it's created an asset that is used by everyone. For people who don't know, like, the delta neutral trade on JLP was the single most popular trade of this last cycle for any professional investor, basically. And JLP is like a major asset, not just in Jupiter Lend, but other lending markets and so on. So there's more to come. Yeah, there's Phoenix from Ellipsis is making a shot at it. Bulk is making a shot at it. There's a few people that are starting to come in. So we'll see what's coming. Of course, we have our own bet here, JupNet coming up, that might be able to kind of push the envelope on what's really possible, but more about that another time, I suppose. And then the growth of Jupiter prediction markets is something else that you seem to be tracking.
Yeah. So just highlighting some Blockworks research data here. So obviously prediction markets is another domain that Jupiter has moved into. First integrating with Kalshi back in October, but then in early February, Jupiter essentially integrated with Polymarket, and the volume profile switched since then and has since quadrupled. Strategically, in my opinion, it's the same playbook Jupiter has run on the DEX aggregation side, essentially being the routing layer that abstracts the venue so users can stay on Solana, and Jupiter handles the rest where the underlying liquidity actually lives.
That's right. And then you saw some sectors that in here. I mean, this is why I love the Blockworks data team, man. This is like data that's arguably better than our internal data in terms of like what we're able to track and see here. So yeah, what are you looking at when you see the different types of markets people are using in Jupiter Predict?
So just looking at Jupiter Predict and then looking at Polymarket, our engineering team has been hard at work, as prediction market data is often notoriously hard to like break down. But as you can see here, that the underlying sector trends show that Polymarket's open interest by category has essentially grown from 70 million in early 25 to now over 340 million. Politics is still the biggest category, but the mix has started to diversify meaningfully, with sports and crypto also building a real share. And this is a sustained, essentially highlighting product market fit. It sustains post-election growth instead of just a 2024 election spike. And in my opinion, highlighting how the sector is both durable and is only going to get deeper from here.
Yeah, absolutely. I think the only sad thing about this chart is that it's not all happening on Solana, but we're trying to help change that a little bit here.
I guess on that point, Polymarket's VP of engineering did confirm that they are looking to migrate away from Polygon due to having the gas fees too high, settlement speed too low. So it is a possibility that we could see Polymarket move to another chain, possibly Solana.
Do you have a bet on which one it is? If there was a prediction market on this, where would you put your funds?
I'm leaning to using existing infrastructure. Solana would probably be my front runner at the moment, just due to its throughput advantages. It already has a massive ecosystem with you guys and a range of other applications and users. So it makes sense from like a composability point of view to easily plug into other areas and already have a strong user base. So Solana would be probably my #1 bet at the moment.
There we go. All right. Sam, this was fantastic. We should do this section every call, and you should probably come back every goddamn call. So a deep dive into the kind of macro kind of sentiment, what things you should be looking for, along with some charts about Jupiter. If you want even more high quality data, about Jupiter, but also about crypto in general, please do go head over to Blockworks. They have a ton of dashboards, some of the best data in the game. Deep dive reports, things on financials that you're not going to see anywhere else. Very much encourage people to check it out. Sam, thank you very much for coming out, man. It was great having you. Appreciate it.
Awesome. Cheers, guys.
The information contained in the session by Blockworks Inc. and related affiliates is for general information purposes only and is not intended to provide legal, financial, or investment advice. Anything said in this session should not be constructed as an offer or solicitation to buy or sell any security, token, or instrument, and does not represent any recommendation or endorsement of any investment or financial product or service. And Blockworks and related affiliates are not registered as securities, broker-dealer, or an investment advisor.